I'm recording. Yeah, all right, cool. So this call is literally just to help people understand how to set up their charts on a basic level, support and resistance, and how to sort of understand when there's going to be a reversal or where to place your orders for a trade that you're looking at. So starting off with the basic support and resistance. So the easiest place to see support and resistance levels is the higher time frames. So I wouldn't say necessarily in crypto, going past the weekly. I would say, for most coins or all of them really, you won't need to go past the daily. So you can look at the higher time frames, but you won't need to do any analysis on them. My personal opinion, I could be wrong. But how do you plot these lines, these support and resistance lines? So what I do is I just get a horizontal line from TradingView. If you haven't used TradingView before, I would suggest you use it. But what you do is you just go to, it usually starts with a trend line. You just go to this second option here, and you have this menu here full of lines. Yeah. So what I do is I just start plotting lines. If you want, you can press Control or Command if you're on a Mac, and you can clone line just like that. Yeah. But I'm not here to show you all the shortcuts. So what you're looking for is you're looking for levels of where the market has reacted a number of times, usually 3 or more. And what you're doing, you're just trying to get the best levels possible. You want to see that the market is respecting them more than it's trading through them. So this level here is not as significant as the 2 levels either side of it, because you can see the market's traded through it more. But on a lower time frame level, you would expect that once price comes to somewhere around here, I would say it's more here than anything. Once price comes to that level, you'll see some sort of reaction as what we've seen here on Bitcoin. So once you've gone up to your higher time frame level, you want to step down. You want to go to if you're on a daily, you want to go down to the 4-hour, and you want to start fine tuning these levels, adding more less significant levels, just so that you have an idea of where the market is at on a lower time frame basis as you get more to sort of where you would execute your trades. You want to get these sort of higher time frame ranges in check, and then you want to go down and start getting more precise. So there's one there that I can just see off the top of my head, and one here, and just above that. This is a bit less significant, I would say, because I'm sure if I go back a bit, I'll see a bit more areas where that area is. Okay. So as you can see, all these lines I've charted out have had some sort of reaction from the daily level. Here, these less significant lines that I drew on the 4-hour charts, you can see the daily candles have wicked through and had reactions around them as well. Yeah. So 1 hourly, I don't personally draw any support and resistance levels on. Well, that's a lie. I do, but I don't go. I don't use them as sort of permanent levels. The daily and 4 hour levels, I hold them with more respect than I do a 1 hour level. But saying that, you can come and then fine tune your 4 hour levels. You could come and maybe place one more up here, just because that's a bit more of the range high for this area of consolidation that we got before this drop. So you can come and do that with your higher time frame levels on the hourly and just fine tune and see a bit clearer of how the market has reacted. So that's
bro.
it's your reason.
Hey, sorry, bro. Before you go ahead, did you know that these are all muted, by the way?
Yeah, I did. Yeah, I'm muting everyone because I'm taking questions at the end. I'm also recording as well. Yeah.
Sweet.
Cool. Yeah, so yeah, you can come down into the 1 hourly and fine tune your support and resistance levels a bit better if you want to, but or if you're a more short term sort of day trader, you might want to start from the 1 hourly and work your way down, or the 4 hourly and work your way down. You don't necessarily have to go from the daily. It's all about your trading style and how you want to approach the market. You might want to be in trades for 15 minutes, an hour, 4 hours, and the less amount of time that you want to be in a trade is where you do your analysis. So day traders usually trade 1 hour, 30-minute and 50-minute charts. The more of the intra-week swing traders might do 4 hour, 1 hour and 15-minute. Me, I kind of class myself as a swing trader, but I go daily, 4 hour, kind of look for entries on the 1 hour, but I'm not really doing much technical analysis on the 1 hour. It's really daily and 4 hour levels that I'm looking for. So just before I move off of support and resistance, as you can most probably see from these lines that I've drawn, they're not exact. You do get reactions from those levels, but you can see that the market is reacting all over the place. It's not just a specific price that the market is reacting to. And that's because these levels, they're more like zones. So to what I do to sort of make this idea a bit more significant to me is I will go ahead and, instead of making this 63.7K, I'll go ahead and just make it 64. You can see that the market is still representing that level. And then I'll go ahead, get this, and depending on the specific trading asset pair that I'm looking at, I'll just go ahead and draw this rectangle. For Bitcoin, it will be a range of about $500. So it will be somewhere around, the high will be around 64,250. If I can do that, I can't really see, but just to sort of, when I go down on the lower time frame levels, I can kind of see some sort of reaction happening around these levels, and it's like a prompt for me to say, okay, I'm looking for some sort of price action in this area that's going to confirm what the market is doing. So just to come up here, you can see the market is just wicking into this level, drops through. See, just before it was wicking, dropped through. Here, I can't lie, I would have shorted, most probably, or not done anything. You can see what the market is doing. It's come back above, and then it's come back, bounced off this level, moved up, come back, bounced off, dropped. But this just gives you an area of where you can see the market is sort of battling for this level. If you go down into, if you make this wider depending on the asset, or you can make it thinner depending on the asset, you will start seeing the market sort of react in these ranges. So these zones, depending on the asset, can sort of give you an idea of what the market is doing at these levels, and give you an idea of where to place your entries and limit orders. Here, let's draw another one here, just to give you an example. I'm not sure of the range, but I hope you get the idea. This is just to show that we are expecting a reaction at this level. Could do one down here as well. Okay, so when you get down to these levels, you're expecting a reaction. You can see that the market, let's go up to the daily. Let me get rid of these and put them on the key levels, the key daily levels. So what I also forgot to mention is that I only really draw those zones on key levels. So it would be on my, what I call my daily levels. So I've got a template here, and I just mark that as daily. You also see that I've got monthly and weekly here. I don't really use them on crypto. That's mainly for my Forex trading, but this is just to allow me to see the significance of those levels. So then come along, draw this, clone it, bring it down. Clone it, bring it down. Okay, so you've done that now. Now you're sort of looking for your trade. So let's go ahead and look at this area here, this area of price action here. Just gonna make that another color, make sure it's sent to the back. Perfect. Okay, so we can see when the market got to this level, broke through, came down, bounced twice, and then moved up from it. So this movement we see here, I'm just going to mark this level as well, because I believe, what is that, 30K? Yeah. So this area here is sort of like the low that we got in July. And what you can see is from this area, we sort of consolidated in this range a little bit. We broke through, sort of came back in, and then continued trading higher. What you can see here, this is what we call a bullish market structure. So markets made a low, a swing low. So we call this a swing low. A candle making a low and two candles either side of it that are making higher lows. So we call that a swing low. Yeah. So you can see here that the market is making progressive higher lows and higher highs until it stops here. Which in this case, it breaks the market structure. And what you can see from here, it went lower. So when we're looking for buys and sells, we're looking to get into this market structure. We're looking to see price make higher highs, higher lows, and get in on those higher lows once it retraces and we buy the dip. Or if you're selling, and you expect bearish structure to continue, you're trying to sell the rally. Yeah, so piss off. So when we get into these lower time frames and we're looking for the origin of these moves, or we expect that 40k around there is going to be the low after this sort of dip that we had from 53k. So let's start off with the 4 hour, get into this area and see what we can see. So the market came down to this 40k area, bounced off, made a lower low, yeah, from this high. So right here, this bearish structure that started from 53k is being continued, yeah, all the way until it's here. And then we got the break here. We got the break of the bearish market structure here once the market broke this level. So what we would have been looking for is placing our orders around here. If you felt that this was the area that was going to hold after this dip, place your orders here. Let's say you set your orders at 41k. 41k to, let's just put it there, 41k to, what's that, 39k is a 5%, move. So if you believed 40k was going to hold, you say to yourself, I'm willing to risk 5% of my trade position equity. So say £1,000, you risk 50% of that £1,000 and you place a trade that this 40k is the low and we're going to rise from there. Your trade is then confirmed right once we break this high. And then what you would hope is that you would be able to get in if you've got more money than that £1,000. I wouldn't say risk £1,000. If you only have £1,000 to risk the whole £1,000 on a trade, that's not good risk management. But what you would hope is that you would get a return to this level, to confirm this level, that previous high as support for the move up. Obviously, the buys were too great and we didn't get that return. So really, you would have missed any other entries until maybe around here, to get in. But this is what you're looking for. So you're looking for a change in market structure to confirm your entries. So let me just say how I would do it personally. So I wouldn't have necessarily entered here, just because when the market is a little bit weird, I tend to sort of sit on my hands and wait. So I actually think I got in for the move above 46, for the move above 50 at around 46 or 43. If I went back and looked at my charts, I think it was 43. I think I got in somewhere around here. I think I was like, yeah, this bullish momentum, I like it, and just enter the trade, small risk, small position, and then just put my stop loss around these lows. So I would have risked about 9-10% and just got in here. The smart person would have placed limit orders around here, which I wasn't doing at the time, and just waited for this move to happen. So I got in here, took profit somewhere around here, took about 50% off, I believe, and then just rode the rest of the trade up. This market structure here is a little bit harder to demonstrate, but what you can see here is we had this high made, the market came, returned to around 60k, made a new high, came back down low, and then we got a change of structure. Where did we get the change of structure? So we got the first break of structure here. This is where I was alerted, I believe. And I don't think I was expecting a new high to be formed, even though I was most probably trading it. So you see that here, these lows here have been broken. So that's a change in market structure. We've then had the market return to this level, hold it, move up, make a new high, come down, swing. This is what we call a swing failure. So when the market sort of swings, it makes a swing here, swing high here, and then it swings here. If bullish market structure is to continue, we would expect that after this swing, a new high would be made somewhere up here, wherever it is. But it didn't happen. It made a swing below this previous swing high. So we call that a swing failure. When that happens, we can expect price to break these lows. And it did that. now we're coming into more current price action. What we can see here is the continuation of this bearish structure here. So we can see a higher, lower lows and lower highs are being created on a 4-hour time frame. We're seeing a reaction here into this 53K level. So what you would want to see going forward from Bitcoin is that at the least, this level, price come back and reclaim this level to then take out these highs. So you would expect something on the lines, let's get rid of all of these because they don't matter anymore. You would expect something along the lines of this. I'm just going to mark out this range. I'm just going to mark out these highs as well. You would expect something like, not that. Something like this. Bang, 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 take out these highs. Bang, confirm that as support. Higher, confirm support somewhere around here. What we might get though is we might not even get this bounce. We might get something, a bounce up here for a pump higher to take out the highs that are further above, maybe somewhere around here, 64K. This is what you're looking for. You're looking for a change of the bearish structure into a bullish structure from lower lows and from lower highs and lower lows to higher lows and higher highs. Let's go back to March, May, and let's look at the big crash that we got. My claim to fame is that I shorted Bitcoin at 56K. And there was a few reasons for that, but the main reason was on the daily, this Doji. So if you go on Google and you ask them what is a Doji candlestick, it'll give you the explanation of this. So what we've got here is we got the high made. We've got a break of market structure. And then we've got a return, a doji, which symbolizes exhaustion. So the bulls couldn't take the market up any further. We then got a break of that low that the doji made. We've got a similar doji candle. It's a bit more of a bookie one, but somewhere around here is where I shorted. And there were some macro reasons in that I don't really want to go into in this, but if you ask me in the chat, I may explain it to you. But there was I think on this big dump is when Elon made the tweet. So I wasn't expecting Elon to tweet, but just from what was happening in global economics, I said, yeah, we're going lower from here. And we did. I think I sold around 40K. Wasn't expecting us to go all the way down to 30. And when we got down to 30, I was thinking, yeah, we're going down to 20, which we didn't. I think I got in around 36, traded back up to maybe 42, then got another trade around 44, 43, to between 43 and 46, back up to here and in here. But sorry, before I forget, what are we seeing here technically? I already said that. Sorry, I am getting old. Wow. But let me just mark it out. So we've got the trend here. We've got the break of structure here. We've got the swing failure, and then we've got the dump. I think we already talked about this, but yeah, break of structure there. Break of structure here. Return to the level slightly further up. Better return to the level here. This is the perfect one that you want to get in on, and then further up from there. So how can you use EMAs with this? So EMAs are my personal favorite indicator, and it's pretty much the only ones I use other than volume. Volume is outside of the scope of this current presentation, but at some point, if you stay in the chat, I might explain it to you. So EMAs, what EMAs are they are dynamic support and resistance. So like these levels we've got here, these ones can be used similar, but what they do is they calculate. My ones are close, EMA closes. So if you go into the settings, you will see that you can have open, high, low, close, and then some other things. But what it does is it takes one of these price points. Up here you can see you have OHLC, which means open, high, low, close. And what that means is just each of these candles have an opening price where the price starts, a high, so a high of the candle, a low, the low of the candle, and a close, the closing price. So what my EMAs do is they take the closing prices and average them out, weighting the more recent price action more than the earliest candles. So I can't remember the actual ratio, but I think it's like the first in the 50, it might be like the first 5 or 10 candles are weighted higher than the last 40, and the 200 EMA, it might be like the first 30 to 50 that are weighted, or first 20 or whatever. I'm not entirely sure. If you get a an actual standard MA, let's just get one up, you'll be able to tell the difference. I believe the EMA will move a bit more, it'll be a bit more responsive to price as it sort of pushes higher and moves around. You can see that it sort of curves a bit quicker in these dumps compared to an EMA, which sort of doesn't have that weighting towards recent price, so it takes a bit longer to adjust. What I mainly use this for is for swings. So as you can see on the way up, Bitcoin is using this 50 EMA very well until it stops about here and breaks it. I can't remember what happened. I think this was another reason why this break of the 50 EMA, I was expecting this to happen. So this cross here is what we call a death cross. In crypto, it doesn't really work as well. In Forex, it works fairly well. And what a death cross means is just when this 50 EMA crosses 200 EMA, it signals a sort of a change in market structure. And what I like to do is I like to preempt it. So when I'm seeing the market contract and the EMA sort of move nearer towards the 50 EMA, is kind of like a sell signal to me. But when we were up here, I see the break of the 50 EMA as like a potential for us then to revisit the 200 EMA. So up here, along with everything else I was seeing, I took a gamble that we would at least come back down to here, which we did. You can see here on further price action that it does kind of work. You can see a cross happening here. You can see once price breaks above the 200 EMA, and respects it, we kind of tend, not here, but tend to sort of hold above. So now what I would expect with current price is us to at least come down to 50K, and possibly even go back down to 40K. I might explain why at the end. There's not much left for me to say for this presentation. So let's go down into the 4-hourly and hourly just to see how these work, because I believe they work a bit better. You can sort of see clearer on how the market uses them as support and resistance. But as you can see, the 50 EMA on Bitcoin tends to be expected. And once it's broken, if the 200 EMA breaks as well, then we usually get that swing. And this is just a confirmation of market structure. You can use it as what traders call confluence. So the price action is your foundation. That's what you're looking at. Indicators allow you to build confluence, and confluence is where you have a few indicators or things in the market which give you a confirmation of your bias towards the market. So here, this is a clean one, broke above the 50 EMA, broke above the 200 EMA, and then we were off from there. Here, trading around it a bit. Like I was saying before, support and resistance is a zone. But what you can see here is that break of market structure. So that's where you got to start getting iffy. Why have buyers not been able to hold that level? Could just call it a larger retracement. If you know about fibs, you can use the fib to then see, okay, well, we did only retrace down to around the 70% fib level. So if you're Fibonacci trader, that might be something that you're looking at. placing your entries in between the 50 and 70 fib levels. And obviously, once we've broken the 200 EMA, that's a signal for continued bearish structure. Okay, so I think that's all I wanted to talk about today. I'm going to take questions in a second. Why do I think Bitcoin's going lower? Okay, so there was a bit of news today, NFP, just standard economic news that comes out every month, but there's this sort of news media going about that inflation and interest rate hikes and all of this stuff, and rate hikes are not good for risk markets because financing increases for the big funds that are leveraged up to the socks or up to the eyes. So I don't know why I said up to the socks, that makes no sense. But when the threat of rate hikes come, they tend to sort of de-risk a bit. I look at something called the US 10-year yields, and the 10-year yields are basically the US government bonds, how much each bond is yielding for this period, the 10-year period. So you hold a bond 10 years, it sounds a bit mad, but it gives you 1.3% if you hold it for 10 years. They're not necessarily meant to be held. They're supposed to be what the government hands out to basically borrow money from central banks and large corporations who make money, and then they pay it back. So it's not supposed to be a money-making thing. It's supposed to be like cash, a stable way of holding your money. And when yields go up, it means that the market, there's a lot of people are selling the bonds because there's better ways to make money. So they're moving their money when they perceive that there's not much risk in the economy. They move their market out of safe assets and go into riskier assets. Bonds get sold off because they're not making enough yield, and they go into markets like the stock market, crypto, high risk currency pairs like the pound, the Aussie dollar, and there's others, can't remember them off the top of my head. And then when they perceive risk, they move money from the riskier assets back into the safer assets like the dollar, bonds. Japanese yen is considered a safe haven currency. If I said dollar, I hope I said the dollar. And gold, which is kind of considered safe, but not as much as the other ones I've mentioned. So right now, if I just zoom out a bit, we got the start of COVID somewhere around here. I think December, we wouldn't have, America and the UK weren't really aware of what was going on in COVID, but at this time in December, but somebody was, and they started selling. Once we got into February, March, and it was starting to get serious, you got the you got the momentum. When we got to April, and fiscal policy was coming in, the central banks were starting to prop up the governments, giving them trillions of dollars to help support the economy and do whatever. We started seeing the market sort of balance off a bit, find support, and start moving up. I would say, I think in like the stock market, I think it did start heading up before crypto did. But as you can see, the bonds started leveling off around August. And I believe August is when we started getting the real bull run happening in crypto. I'll overlay the Bitcoin chart in a second. But as we can see, we've just got this bull run trend line here. We've got the COVID trend line here. And when was this? This was March. So around this time this year, in March, April, May, we actually saw Bitcoin make his top around 65k as well. And around this time is when we were getting a lot of news. We got the recovery, inflation talks, rate hikes were being considered, blah blah blah. And yeah, we got this dump down into July where we bottomed out and we started moving again. So what you will see is when I pull out this Bitcoin chart, let me just set it up properly. Regular. Oh dear. Where the hell? Wow. Oh, I see what's happened. I think I see what's happened. The chart's gone mad. Okay, let's get rid of that. I think. Oh, my bad. Know exactly what I've done. Okay, remove that into a separate pane first. Sorry, guys. Scale, pin to a new right scale. And then we have price, regular. Okay, so I hope you can see it. I'm going to change this color as well. Just to something that's a little bit easier on the eyes. What you can see is I'm not going to be able to sort of get them right together. But you can see Bitcoin price and bond yields are correlated. I think it's what they call a positive correlation. As yields go up, Bitcoin price goes up. As it goes down, Bitcoin price goes down. So what I would expect here is, if we can't hold this trend line, which it doesn't look like we're gonna do, we could see Bitcoin break 50k and possibly 48k as well, and maybe trade all the way down to around 43 or 40k. And support here for bond yields is around about here. I'm not sure what that is. I think that's about 1%. If I just get rid of this Bitcoin chart, go back to regular. So it's around 1.2%. And I would say it's not really regular people that are buying bonds and selling them. So if bonds are being sold off, it tends to mean that there's something that regular retail investors are not seeing. So it is a good signal for me. I like to use it. I also do use Forex as well as a sort of a parameter of risk as well. We can see pounds not doing too well. I believe we're going to get back to 1.3 soon. Aussie dollars not doing too well. I should have shorted at 80 when I was thinking it, but we're back below 80, which was holding for a while. But yeah, if 78 doesn't hold, we may trade all the way back down to 76 and 75. So all things to watch out for. I necessarily wouldn't be buying any crypto right now. I do hope I'm very wrong. I would love to be wrong, but on longer time frames, I don't tend to be wrong a lot. Lower down on hourly, 4 hour, minute time frames, 15-minute, 30-minute, I can be wrong all day. But when the market is as clear as it is on the higher time frames, it's very hard to be wrong. Market's looking very bloody right now. So if you are looking at buying, maybe sit on your hands a bit. And that's it for now. I think I've been going for an hour. Wow. Wasn't expecting to, but I'm going to take some questions if there's anyone still in the chat. So yeah, do I have to unmute you? Let me unmute everyone. If anyone has some questions, either put them in the chat or talk. The floor is yours to ask questions. If you got charts you want me to do, now's the time. Ask away if there's any crypto charts, any questions. I'm here all night. Can I look at VRA? Of course I can, bro. I did look at this yesterday, but I don't know if you can tell my memory's poor. I'm like 65 in brain years. As everything else is doing, it's kind of reacting off its support level. I'm just going to get rid of that. This trend line could possibly hold if we don't find more selling in Bitcoin. We are going into the weekend, so Bitcoin could very well hold 53 and get some sort of relief rally back up into like 55, 56 is all the way up to 58. Just off of weekend buying momentum. I could be wrong. We could just carry on lower. But the market to me for veracity looks like, we've got if you're just looking at market structure, let me get my arrow out. We've got this trend going. So bang, 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 bang. what you do have to consider though is, oh wait, no, let me draw this again. So we got this, 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 and what you would hope is now that it's come back to this support level, that we just get that and a new high. The way the market's looking, I'm not too sure of that. We've also got this trend down, sort of similar to how Bitcoin has that local trend, bullish, bearish structure going as well. So that's something to look out for. If this holds, we may get a return back up to sort of these levels here, somewhere around here. Just looking for something to react off for a lower move if it does. If we do reclaim sort of around this area here, what is it, 0.056, maybe 0.055, somewhere around that area. Sort of somewhere around here. That is not the right thing. Somewhere around here. Then, you know, if we get back above this, and we can hold somewhere around this blue box here, then we may be able to get higher and start, you know, taking out some of these highs. Back above 0.6 here, above those highs around 0.6, 0.00, 0.061. Then we've got 0.7 roughly and 0.8. Just start looking at places where the market can sort of take it to, given that we have some bullishness and the market's not red. I hope that's great, bro. Anyone else want to chart? Any questions? No, I don't think my voice is that great to listen to, so you're either sleeping.
It's still.
Yeah, here we go.
It's sexy, fam.
Bro, I'm recording this, you know, and I'm putting it on YouTube.
Oh shit!
Yeah. I'm not editing it out as well, bro.
I only just joined. Allow me.
I know. I know. XPR. Thanks a lot for VRA. No problem, bro. I'm gonna do XPR. Do you suggest you're looking shorts right now? Slyly, I would suggest looking for shorts. But that is not financial advice.
Are you sure?
It's not financial advice, no. XPR. But it's not financial advice, but I'm looking for shorts. It's not financial advice for you, it's financial advice for me. XPR, similar thing. Let me just go back to, what was we just doing? VRA, wherever that is, because I didn't actually see the EMA on it. I'll go back to it in a second. But we've broken the 50 EMA on the daily. We haven't had enough candles for the 200 EMA to start yet. I wouldn't know where that would roughly start, but we've broken below it. We've retested it up here, and we're sort of selling off. So I would say I'm on a call right now. Come back later. So if we break this low, I would expect us to go lower. We may find support at any of these levels here. But I wouldn't be looking for a bottom, because picking bottoms gives you stinky fingers. So I would follow the trend. Follow the trend as much as you can until you get a confirmed that market structure has changed. So when you're looking for bottoms, you don't want to get in at a level unless you're getting in on a dip, which it's hard to differentiate between dip and bearish trend. So this, in a sense, if you're looking at from where price started, it's still in a bullish trend. But as you can see, market structure from the highs till now is bearish, because there's obviously lower highs, and the market is not really bouncing well and not creating any sort of higher lows and higher highs. So what you're looking for is when you get down into a level to confirm whether or not that is a low. You want to see something like this happen. So we've come down into this level. You want to see this high being taken out. Any sort of dip back into this level, you want this low. You want this low to hold. So you want to see the trend start. You want to see this high taken out. And someone, instead of getting in on that dip, they might wait for the confirmation of price above this high and then get in above here. You may decide that you want to get in maybe on a lower time frame. You might see a level like this one here. So, let's just say theoretically that we've got a swing low here. Yeah, price came back above, let's say, this area here and held it as support. You might want to
All right, can everyone hear me? Everyone in the group, can everyone hear me? Yeah, I'm assuming so. Share my screen. All right, sweet. So I chart a little bit different to King. He more marks out levels. I just mark out zones. So effectively, what I look for whenever I'm looking at a chart is I just want to look at the zones of where price is pretty much bouncing off, and where it's pretty much finding resistance at as well. So what I look for whenever I'm opening a brand new chart, this is a chart that I've done already, but whenever I open a chart, I pretty much look for a zone where price is reacting off, and again, where's a zone where price is being rejected. So if we were to take this out of the equation, we can currently see that this was the support before the major move up. Price pretty much came into the zone, found support, broke out, came to the next zone. You wouldn't have known the zone until the price got there. So I pretty much just look for the wicks, and then I look for maybe a close inside of the zone as well, or close just below the zone prior to making a wick. So then I then see that price has now come back to the zone. And then when the price does come down to the zone, it pretty much tried to come back. It tried to break back out of the zone, but then the bears pushed it back down. It came and found support. And then we've got these lower candle, these smaller candles. You've got Doji, you've got inverse hammers, and then you've got your bullish candle here. Just bear with me a second. Someone's calling me. Bear with me. Sorry about that. I was just taking a call. So how you pretty much find a zone is you pretty much just want to look for where price is reacting off of. So effectively, you can see that price is reacting off of this level here. So let me just make it a little bit more easier. Let's go into a different chart. All right, what I'm gonna do, make it easier. Give me a coin, and then I'll open up a fresh chart, and then I'll show you how to find a zone. So if you just name any coin. It could literally be any coin. ADA. All right, let's do ADA. So what I would do typically, you could either go down to the daily time frame. For this case, I'll mark out the daily time frame. So effectively, you're going to want to look for the wicks. So you're going to look for where the wicks are pretty much reacting from. So I would call this a zone. This is a zone right here. So when you get a wick into the zone, you're going to see if price is reacting from the lowest point. So you're going to want to see the wick here. You see price is reacting, price is reacting, price is reacting, and then you've got a bigger reaction from this wick here. So from this candle on the 28th, we got a massive wick from that zone. And then if we now come down to the 4-hourly time frame, you can see that price reacted from the zone because before this candle closed, the candle was obviously closed nearer towards the top. So that's just showing that there was some buyers trying to push the price back up. You can see that it's wicked in, it's come back out, and then it's been pushed out. So effectively, this is now classed as a zone because price has come down, it came into the zone, reacted, came into the zone, reacted, came into the zone, reacted. And then now it's come into the zone for a 4th time. And then you can see now it's being reacted from this zone. So this is a very strong zone, this zone here. So if we were to look for another zone, for example, can pretty much see a zone here already. So if we were to mark out this zone here, let's just put it back a little bit. Probably put a zone like, you can even mark out this bit actually. No, it's a bit too big. All right, so you can see here. Let's just leave the zone to about here. So we can see it found resistance at the zone over here. So it tried to come into the zone, found resistance, got pushed back out, but then it found bullish momentum to then push through to break this resistance. So this was once resistance. So the reason why I said that me and King pretty much mark out our charts a little bit different is because I used to put lines, for example. I used to put something like this, and then just see where price is pretty much just reacting off. But now I just pretty much just put zones, because the price doesn't always bounce off of your support line. What you may see, which you've seen here, is where you may get a wick through the support, and then you may think that if you're in a trade, then what could happen is that you may think, okay, well, maybe it's breaking support, but realistically it's actually not breaking support, and then you may just, you know, get a bit scared and then close your position, because you may think that, okay, look, it's breaking support, you know, let me just close my trade because look, it's broken support. Especially for newcomers anyway, they might get scared and think, oh, I've marked out my support lines, but you've wicked through it. Does that mean that support is broken? No, it doesn't. Effectively, the reason why I mark out the zones now is because it gives me a clearer view of where the price is reacting off of. So effectively, you can see here, it's found resistance here, pushed back out, and then it had bullish momentum to push through the zone, but then it pulled back, because in charts, what you're going to see a lot of the time is that you're going to see it have a bullish momentum out and then pull back, bullish momentum out. So this has probably been explained to you already. I'm just going to do it anyway. So it comes out, pulls back, comes out, pulls back, comes out, pulls back. And then you pretty much just want to find zones of where it's pulling back to. So we can see here that it's had bullish momentum out, pulled back, bullish momentum out, pulled back, bullish momentum out, pulled back, and then it's continuing the trend. And then when it did get a sell-off, it came back to the zone, because look, we got a wick into the zone. And then if we just zoom in a little bit, we can see that price did react very nice from the zone. Although the candle didn't close green, it had a nice reaction because we got a nice big wick. That means that there was a lot of buyers in this zone. So the zones are mainly for buyers. So this is support / buyer zone. Yeah. Price then came back to the zone, reacted from it, pushed it out. And then if we come over here, price came back to the zone, pushed out. So we had some buyers in the zone still. So there. Came into the zone, had some buyers here, and then pretty much just been consolidating, going sideways in the zone. So that means that it's found great support within the zone, and then it got pushed out again. So buyers found some momentum, because all of these small little doji candles, inverse hammer candles, these are all indications that a move is coming. And then we did eventually get pushed out, and then it came back into the zone, reacted. And then if you want to see where it lost the zone, what we could do is just pretty much pull the zone over, and then we can see that we kind of lost the zone, came back in, and then now it's now formed as resistance. So you had support, and then back there we had support, and then it broke support down here, and then it turned it into resistance. So then it broke support, came back in, resistance, pushed it out, and then we have your lower high, pushed it back into the next zone. So this would be your next zone here. As we marked out on a daily time frame, you just want to look for wicks of the lowest price of where the price has gone to, and then you just want to look for where the price is pretty much wicking off of, and then you can then mark that out as a zone. So then what could happen here now is, because this high has been this high over here has been taken out by this high, so it's now coming back into the zone to find support once again. But then what it could do now is do something like this. It could now make a new higher high, taking out this high here, come into this zone, potentially get pushed back out. And then what could happen is then form a high low, which is your high low here. Oh, this is your high low. And then it could break the zone, and then it will do something like this potentially. I'm not saying it's going to happen, but it could do something like this potentially. Break the zone, obviously not that high, come back down for the pullback. So there's always going to be a pullback, and then you go, and it just keeps going. So that's pretty much how you would pretty much look for when you're looking at zones, because these are buy zones / support zones. So sorry, what was the question? Is there any way to decide that the zone will be broken and will be going down? Your explanation is great. Great that point. All right, yeah. So is there any way to decide that the zone will be broken? Yeah. So effectively, if we look here, you can see that once you have your zone here, if you start wicking below it and then you start forming lower highs. So this is a high. I mean, not the high. This is your lower high. This is your, so let me not call it lower high because you may not know this terminology, but I'm just going to say this is your high here. Then you've got your another high here because remember your wicks are your highest point that the price got to. So this is your high, this is your high, and then this is your low. This is your low. And then now you've got because this high is still lower than this high. So then what will happen is that, look, you can see that price made a lower high here, lower low, lower low. And then it tried to make another higher high to take out this high, but then it failed because it turned it into resistance. So then what happened is that the price then got pushed out. And then what will happen is that you would then fall down. You pretty much just sell off, still in a downtrend. So you got your lower high, lower lows, and then your downtrend, find the next zone. And then what will happen is if you find support at the next zone, you're looking for it to hold as support. Now, you always know if it holds as support because you're going to see price react off this zone, price react off the zone, and then react, come back down, react off the zone again. And then that's how you can identify that this has now become support. Hopefully that makes sense. But you can see pretty much just from looking, just zooming out of the chart, you can also so you can also see just pretty much zooming out from the chart, just looking at it from like just outside looking in, that you can clearly see that, look, price rejected out, pushed out, support, 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 and then you lost it. Then resistance, support, support, support. Now hopefully you can have enough momentum to then push through, find support again, continue the trend. But I need to go for literally 2 minutes. So I'll be back in literally 2 minutes. Yeah, and I'll come back on.
Yo, does anyone want any charts? Anything explained? I'm back, baby. What it do? Let me allow you guys to speak. Sorry, I didn't even realize everyone was still muted. Let me change the settings as well.
Yo, can you hear me?
Yeah.
Yeah, bro. Can you go through order blocks?
Order blocks.
Yeah.
Yeah, sure I can, bro. So okay, so the way I see order blocks, sometimes I call them supply and demand zones. But the way I see them is they are the candle that makes, let me go to Bitcoin because that's my favorite chart. They are the candle that makes the swing low in a sense. So close this, or the candle just before. So let me find a very, very good example. Let me go up because what is this? Where's price? All right. You know what? I can't see anything on here that would give me the most perfect explanation for order block. Let me check. Sorry, let me just check.
I think maybe on Bitcoin you can use February the 8th.
Man said a perfect. Man's got a date already and everything.
Well, I've been trying to work it out, man. It's been hard for me.
All right, let's look at February the 8th. Let's see what February the 8th says.
It should be around that thing.
Okay, so you are talking on what time frame?
I think it's the 4 hour. You see that red block, that shoot, that little run up where you have the green candle and then have the red block. Would that be an order block there? So
You're talking
it's
this one here.
Nah, to the right, all the way to the right. That big green candle.
Here.
Up.
This one here.
Yeah.
Yes. Yeah. But the only reason I wouldn't call this an order block, I would call it a breaker. And that's literally because it's not at the start of the trend. So what I would call it, a breaker is still an order block, to be fair. So yeah, it is an order block. It's the simple term. So order block is basically where you would expect, as a ICT or so-called institutional trader would call it, is where you would find institutional orders. Really what it is just supply and demand. So buyers that bought in here that want to protect their positions, they're going to start buying within this range. Here, if we go down into lower time frames, maybe the 4, the 5 minute, maybe the hourly, may need to go lower than that. Just so where we are, it's gone all the way back. Okay, let me zoom out to zoom back in. Nah, charts are doing me.
Yeah, it does the same thing to me. Okay.
Yeah, sorry, give me a second. Just scroll all the way. As you can see, we marked out two candles on the 4 hour. I've gone down into 1 hour. So they're no longer candles, they're more like ranges of price. But what you can see is it's marking out this range or this swing before the move up. So what you can see is that we've got this area of consolidation, high here, swing here, break through this consolidation, return to it, and then a higher high before the mad pump up. So all you can see is buyers got in here. Maybe small bit of taking profit once the high had been taken. High leverage traders would have got out here. Maybe not all of their position, but some of their position. And then a large bit of buying was done here. But so order blocks, they're just areas where larger traders will place their orders to protect their initial positions. So they would have bought here initially or into those red candles before the pump. Let me just get the brush out. So would have been buying into these candles, pumped it, taken profit here, been brought back into that 4 hour order block, pumped it again. Now 4 hourly, we've got that what I call the breaker. Markets, so additional large traders pump the market here. Market's gone up here, profit's been taken. So the ones that were buying up here, they're now scaling out larger profits than what they were before. We've got the traders that were buying here, pumping the market back once prices got back into the area where they've initially been buying. So they placed their orders, those orders are getting hit and buys are being filled. And that's pretty much it for order blocks. Let's see if we can find a sell one. So let's find a good sell one.
How would you play that move, like moving forward? Like if you was in the present day,
I wouldn't play.
I
don't use order blocks in it. I just know of them. So I wouldn't have. I don't think I necessarily would have played this move. I may have seen, say, like this high being taken, but not necessarily would have got in on here. I don't think I wasn't trading futures in February anyway. So yeah, definitely didn't see any of this. But if I was trading order blocks, this one is a better setup for me. So the 4 hour, we've got the 4 hour order block that we found earlier. We've got the pump either side of it. So once the market is traded back into this zone, I'll be looking for buys. What some people do is they go and get the midpoint of the zone, which would be somewhere around here, I believe. And that's where they would place their orders. Obviously, you would have been missed there. But what you might want to do is what they would do is smaller orders in at the top with your larger orders going as close to the midpoint as possible. Your stop loss at the bottom of the order block. And you just sort of scale in as price sort of trades in this area. And you might set your first target at these highs and hold for further upside. And just to be fair, let's see if we can find a bearish one. So I want to go back up to the 4 hour. This is actually a good bearish one right here. But obviously the reaction off it is not the best. But you want to see candles like this, so you get a swing, sort of, and like a large candle lower preceded by a either like a bullish candle before a large candle down. That's like the best sort of sign of an order block. But it can literally be any. It could be this one here. It could be this, but usually the order block is the candle before the impulse move. So just to highlight some before I find the bearish example, that one there, we've got this one here, although I don't really like that one, but that one there. We've got one before that, this one here. You might only take note of the body though. Some people only take bodies instead of the whole range of the candle. So body there. We've got a what I call a breaker here, propping up price for the large breakdown. Bearish examples now. So I think there would be one here, somewhere around these candles here. So I'm just gonna I'm gonna go down into the hourly, see what I can see. It's not really the best. Yeah, no, that's not a good one. I don't think Bitcoin might not be the best to trade order blocks in, to be fair. Or maybe on higher time frames it's not the best. Let's see on, if we go down into the 5 minute and just look at these, what's this, 3 or 4 days here. Why am I even in this chart? Sorry. Okay. Could possibly say that's an order block. bearish. That one there, not really. Yeah. Bitcoin to me doesn't look like the best to look at for order blocks. I mean, I haven't used it since I've been trading futures. And personally, it's because I think market structure is the best thing to use. But just trying to find him for you, man. I wouldn't necessarily call that one.
What makes crypto or chart good for futures?
Well, there's only a certain amount of pairs you can trade. Not all charts you can trade on futures. I think, for example, out of these, all of these you can trade futures, but like let's say on Binance you can't trade. I'm not sure if you can trade Coty futures. You can't trade mainframe futures. GRT you might be able to. I think you can trade ENJ. If you know about Theta, their other one, T Fuel, I don't think you can trade that futures. So really it's just about what you're able to trade and what's not. Really you want a asset that sort of has a relationship to Bitcoin, whether it moves the same way or it moves opposite to Bitcoin, but something that you can say, okay, when Bitcoin's doing this, this should be doing that. And then you can sort of make your trading decisions sort of as a consequence to what you see the market doing. But I would say, I think if I go into Forex just to find more order book players, I think I'll find them a bit easier than I am on crypto. Let me just have a look, because that's bugging me. Go up to the 4 hour. Okay, one here, I think. One there. You have a kind of have a bearish one here. This isn't really capping any price. If we go down into the 1 hourly, you might find something here. Let's just go down. Zoom out. Where was I looking at that? Should take a note of the time. Where the hell was that? March, February 2020. Yeah, and then you've got this one here. And yeah, literally all it is where you see or where sort of the market makers, as they say, are starting the selling. And when price gets back into those orders there, back into that area, more orders are coming into the market. So yeah, that's what institutional traders look for. And yeah, I think the best thing to look at in the market is, or something easy when you're starting off trading, is just follow the market structure. Follow the trend. Higher high, higher low, higher high, higher low. Once a lower low is seen in the market, start looking for lower highs, lower lows, lower highs, lower lows, until you get a change. You can see here, there was most probably, if you zoom up, if you go up, there was a larger trend going on, and then we finally got the change there. So yeah, follow market structure, and then add on things like order blocks and things like that.
How would you go into a trade using market structure?
Okay, I did explain it earlier. I'm gonna explain it quickly again for you, innit? But when I post this video, either in this chat or YouTube, you'll be able to watch back the full explanation. So market structure here, we can see we've got this trend higher. Yeah, you can see the market is making higher highs, higher lows. Yeah, higher high, higher low. Let me just get the arrow out. So I'm not even gonna go all the way down there. I'm just gonna start from here. Swing low here to a higher high, higher low. Those lows here weren't broken, so we got a higher high, up. Broke these highs, made a new high. Down, higher low, up, higher high. Yep. Now the market's come and it's broken this market structure. Yeah, so now when you've seen this lower low being made, alarm bells in your head should be ringing. So here we came back above and it continued using this as support and made a new high. We came back off that high and we had a swing failure. So this is a trend change. Once you get a swing and price cannot make a new high, so we've got a new high made. We got a swing. Price can't make a new high, and it's broken the lows. Yeah, and obviously we have this already. This market structure break on this trend here. Even though we've made the new high, we've got this previous. So it's broken this. And then now we start to look for the same pattern. So here we've got the start of it. Was it lower high, lower low, lower high, lower low, lower high, lower low, lower high, or similar high, but to where we are now, lower low. And so yeah, the market, when it's trending is the easiest to trade. When it's consolidating, you do sort of get opportunities. As you can see, these are most probably like 5-10% moves. Yeah, there's trading opportunities in there. When we get the new high, obviously a new high is made, so any sort of dip you are looking to buy. But once you see that a new high cannot be made and you're getting a fair swing off, you're getting a like swing failure, and a previous swing is being invalidated, that's when you know there's a market structure change. So here the trend showed weakness. At these lows here, the trend showed weakness. When we now break this, you can expect this to break as well because of this previous weakness. And then if you didn't get in on this, or if you didn't get in on this swing failure, or the break of this level, then your next opportunity to sell is here. And then you can be assisted with the EMAs if you use higher time frame EMAs, the 50 and the 200. You can see the break below the 50 and the break below the 200 EMA. Once the 200 EMA is broken, you can be fairly sure that there is a possibility of a significant move lower as well. So market structure just allows you to sort of get in line with the trend, in a sense, rather than sort of looking for what the what institutional traders are doing. Because yeah, it does help sometimes to look for order blocks and stuff, but I mean this looks clear to me. Looks clearer than looking for sort of specific levels where buying and selling could be happening on large scales.
So how long are you holding your positions then?
I sold. Actually, no. What did I sell? I think I sold like, I don't know. I have to look back in the media for this chat. But I think I was selling up in the 60s. I bought around I think I bought around 58 for this run up. I think this initial run up sold I think at the previous all-time high around 65, like 50%, and was just holding all around here. I can't remember where I sold for lower. I want to say I've recently been in a short from about 60Ks, just like 60.6. I've been out of that though. I got taken out of that. My profit target was hit as 53K. So I'm out of that now, and I did start longing from 53K, but I added higher at like 58, hoping that we would break back above 60. My average got brought back up to like 56, and once we got back to 53K, I got stopped out. So yeah, with market structure, it is very clear, but you know, if you do have like a bias or like sometimes you can be emotional when trading. You might think you know, Bitcoin is just buy the dip, just buy the dip and you'll be good, you know. Sometimes that gets into your mind. You don't necessarily want to see the short even though it's staring you in the face. And I feel like when I was trying to buy at 53K, that could possibly be what I was seeing there. It still could find support here and go higher, but my feeling is that we're going lower from here. 50K, 48 if we don't find support there, and then low 40s.
Okay. Okay. So you're not trading every day then?
I wouldn't. No, I don't open trades every day. No.
Okay,
Nah.
I get it. I get it.
I'm higher time frame. I'm looking to milk these trends. I'm not looking to be. I'm looking to buy on like I might, for example, once this breaks, I might sell, and I'll be looking for like a 10-15% move down. So that would be like from around like 62K to like 56, and then sell 50% and see if we get any more momentum or any more of the trend. But
And you're using
sometimes I
leverage
might
with
do a
it?
day trade. Sometimes I might do a day trade and use tighter sort of risk. So I might use a smaller stop, maybe 1-2%, looking for 3-4%. But yeah, most of the time I'm in sort of longer term trades, smaller position sizes, and larger margins of error and larger profit targets.
And your bigger trade, so your 10%. Are you doing that with futures, or are they just spot?
Mainly futures. Yeah. If I'm spot, then I tend to be holding for like proper long term, like usually years.
Mm-hmm.
Like I don't really touch my spot because most of the stuff in my spot side is like I'm expecting them not to play out for another year, 2 years or so. So I tend to not look at it as much. Obviously I see the prices daily, but I'm not sort of buying and selling and moving it about. The only thing I am doing is buying if we get a dip.
How do you manage your risk on future?
So it's mainly it has to be a risk to reward ratio of at least 1% to 2%. So for every 1% I risk, I want to get 2% back. So I just use that. I usually trade 20x, and instead of changing my leverage, I change my position size in terms of my confidence. So the more confident I am, the larger my position size is, and the less confident I am, the smaller my position size is.
Got it. So if you see, if you got in at that high or you sold off at the high, where would you have a stop loss? Or
If I sold the high,
yeah, if you sold the high.
what, so are we talking at like 69% if I sold there?
Yeah.
If I sold 69 or 70, I don't know where the high is. If I was selling around here, I most probably wouldn't be. I'd most probably be looking for buyers. I don't think I would have been looking here. This is where this dump here, and maybe even the break of this low instead of this more significant low. This here is when my mind my mind would have started looking at potential for lows. And then from here, depending on how I was feeling, I would see, okay, my largest risk amount for a futures trade is usually 5%, because I know 20x at 5% is 100% of the margin. So I would look for 5%, a little bit above these highs, and then sell that. And then just ride the trade down for as much as possible. Taking profit at 10%, 200% on futures, and then just holding the rest. So 10% would have been, but 10% is where 58. Somewhere around here.
With like the 20x leverage, what would that be? The percentage.
20x, so it's 20x, 20 times 10.
Oh, okay.
20 times 10, 200%. Yeah, so you risk 100% for 200%. Take 50% off. That 50% is your that is your, and then the rest of the money that's on the trade is your profit, and then you're just letting your profit run, if that makes sense.
Kind of, because I'm trying to get into, I've done like one trade, but I don't 100% get so you would have taken your profit where? I mean, your investment out, do you mean? Or what do you mean by
okay,
that?
So with the trade, yeah, if I was to get in a sell here, with my risk here, if that goes against me, yeah, so say I've put in for margin, I've put $100 in for margin. If this stop here at 5% gets hit, that $100 is gone, yeah. If once I've hit 5% profit, once I've hit 5% profit, I've hit my I've hit 100%. So I now know that my margin from this level is I've got my margin in profit. So now I can either look to take 50%. So I've got my margin plus an additional 100% of my margin. So 100 plus another 100. I can look to take $50 out here. Yeah. Or I can wait for my target of 10%. Yeah. Take out 100. Yeah. And then let the other 100 run. If that makes sense.
Yeah, I got it. Yeah.
Yeah. So it just depends on how you feel at the market, on how whether or not you feel it's gonna run. But yeah, usually one-to-one trades, I'm not too sure on the success rate you need for that, but I think it's like 40% for 2-to-1 trades. You need a 40% like success rate to break even with a it might actually be less. It might actually be like 33 or 35 for a 2-to-1 and like 20% or something with a 3-to-1. I'm not sure. Let me just confirm this actually, because I've got a website for it.
The wicks don't count. Wicks don't count. All that matters is
where the hell is that playing from?
Yeah, let's see. So where is
Oh, there you go. So what is it? Risk to reward success rate calculator. Is it this website? Okay, so risk 1, reward 2. Okay, so you need a third of your trades, 33.33%, to break even. So if you're getting every 4 out of 10 trades right with 2-to-1, you're in profit. 3-to-1 is 25%. So you need to make, if you're getting every 3 out of 10 trades right with 3-to-1 risk to reward ratio, you are in profit. So yeah, kind of look at it more in a sense of, if you can sort of keep calculated with your trades. What's 1-to-1? 1-to-1 you need 50%. Yeah, so that makes sense. I don't know why I needed to even use the calculator for that. But yeah, so long as you're using 2-to-1 and winning every 35 out of 100 or every 4 out of 10, then you're in profit. And once you build a system that can sort of give you more of an edge and more stricter trading rules and ways of engaging the market, then your success rate goes up, because you're looking for the same things over and over again. You don't trade unless you see that, and then you sort of you become selective with the trades that you take. But yeah, usually I'm looking for around 2.5% stop losses. I'm not always risking 100% of my margin, but if I am risking that usually I don't have too much faith in the market, and the market's already started moving, and yeah, I'm just putting a small position size on to see if I can make a little bit of money.
Got you.
Yeah.
Are you doing multiple trades when you're doing future? Like, how many trades are you taking on?
What do you mean multiple trades? As in
Like different. Yeah.
Yeah, I might. I don't know. If you look at my if you click on my display pic and scroll, you'll see some of the madnesses that I get up to sometimes, bro. I think one of the videos in my DPs, it has like 7-8 trades in one sort of slide. But there's some videos.
Where is it? I can't see. You said click on your DP.
Yeah.
Oh,
so
okay.
click
Yeah.
on my
I see it.
DP and then slide and go through the pictures. You'll see some of the sort of like trades.
Oh yeah.
It'll just go through. Yeah.
Okay.
So yeah, but I do tend to first trade like Bitcoin, Ethereum, BNB, XRP, XLM, Solana, ADA. Like those are like the first ones I'm looking at, and then my secondaries are like these. I don't know if you're looking at my screen now, but like Harmony, Basic Attention Token, Internet Computer, and then these are just sort of like just short term. I did try to get in the long term for TLM from like 25-26 cents, and some other people in the chat were trying to get into it as well, but it messed us up, man. And yeah, once we sort of missed it, I think I was in somewhere around 25-26, had my stop here, got taken out, and then we got this rip up. So yeah, I was holding spot though, so I'm not really fussed about that because I've made back what I lost here on the spot trade. But yeah, this would have been a nice trade, man. I think it went up 100%. That would have been on 20x. That would have been 20x.
So is it what you just held it too long?
No.
You can get in early.
My position size was too big, because what I should have done is I should have had a smaller position size, just larger stop loss, and then I would have been able to sort of say, well, I'm in at 25-26. There's a sort of better key support here if you look at sort of this range here. So we've got a range of consolidation here before a break and a move up. Instead of me trying to buy in large here for a pump up, you know, seeing these dips and thinking, yeah, it's gonna move soon. I could see the movements coming, but really what I should have done is possibly if I'm getting here smaller with a wider stop for this support zone here. Let me just mark out that as well. So yeah, larger stop here, wider, so we just get the possibility of this occurring, this dip down into this support occurring, or I should have been buying a little bit here, buying a little bit somewhere around here, and then having large orders here at this support area for this move up. Does that make sense?
Yeah, but the thing is, what at that time you wouldn't have known that, right? You would have been thinking maybe it's going up, or is there something on the chart that you saw that?
Okay, so why was I thinking it was going up? I think it was to do with the metaverse pump. So around about here, we were getting all the news about Facebook changing to Meta and all of that stuff. Yeah. So we're seeing Mana pump, we're seeing Sand pump, we're seeing, I think BAT at the time had started pumping from like 70 cents, and we're seeing all of these coins that had sort of been stagnant moving. TLM is the native token for a project called Alien Worlds, and it's a play to earn. It's like a early play to earn, slowly going into NFT metaverse type stuff. And it was just, we just thought it was going to be one of those coins that get a benefit from the pump. So we were seeing price coming into this previous area of consolidation pump. A trend, we're seeing this, we're also seeing like this trend here forming. Then you get the break. But you know, we're seeing this for the most part hold until you get to here. Here as well, you can see this swing here. You know, we're saying, okay, well, I'm saying, I think the guys are already out of it at this point, but I'm saying, yeah, that level's holding. I wanna, you know, I'm trying to get in. I'm trying to buy because I'm expecting this move. So it's really a thing of, it's like, I am predicting, I'm not 100% sure it's going to happen, but because of everything else that's happening in the market, I'm expecting it. And really, it's just my execution was wrong. If you get what I'm saying, it's like, really, my plan for this trade was wrong. My plan and execution for this trade was wrong. I should have been entering, if I was entering up here, I should have been entering with less than what I had, so that when the chance came to enter down here, you know, I was able to. But I entered somewhere up here. I think it was like, I think I had orders between 25.5 and 24.5, stops around 23. I think all my stops are around 23. And then got taken out, and yeah, once it dropped below 23, quickly blew from there.
Right. Yeah, I appreciate your time, bro.
Yeah, no worries, bro.
Yeah, I'm gonna add you even on here, so if you're free, and I'll send you some TA stuff. What you get your opinion on it?
Yeah, bro. The chat is open. I wouldn't say 24/7, but we're active in it still. So yeah, whenever you need help, just jump in. This chat is for supporting new traders in it. So yeah.
Yeah, I
Whenever you
appreciate
need
it.
help, man, we're here.
Yeah. But yeah, I'm gonna be off. I'm gonna get back to learning. So I'll see you.
Yeah, no worries, bro. Enjoy the rest of your evening.
Yeah, take care.
Cool. And who's left? AL, Al, do you need any charts? Is there anything else you want explaining? Otherwise, I'll just cut the call here.
Thank you very much, bro. It was really great.
My pleasure, bro.
Really, thank you.
Yeah, no worries, man. Anytime.
And
We'll be back on Sunday. It'll be 7 p.m. GMT. So if you're free, we'll have some more knowledge for you, more charts. And yeah, if you need help with anything, we'll be able to help you then.
yeah, for sure, I will wait that till
Yeah.
that time, inshallah. Yeah,
Yeah,
thank
no
you.
worries, man. Okay, I'm gonna end the call here. How long was that? I don't even know how to check the time. Let me unshare my screen. Oh, 2 hours 22. Whew, that's a long call. All right, thank you, bro. I'm gonna go and make myself some tea and watch a movie. I don't know what time it is where you are, but enjoy the rest of your day, evening, night.
Yeah, actually, in my zone, it's 3 a.m. Yeah, but it was,
Oh, so you're 3 hours ahead.
yeah.
Yeah.
Thank you very
Okay.
much. Really, have a
Okay.
good day.
Yeah. Get some sleep, man.
Ye- I almost my eyes opening and closing, but it was so beautiful evening.
Yeah.
Yeah, because learning is so important. Yeah, really, I
Yeah.
appreciate it.
Try to make it like as simple to understand as possible, so people coming in like get the basics fairly quickly, and then they
Yeah,
can sort of start adding on their indicators that they prefer to use and things like that. But I think price action, if you can understand price action, then you can sort of navigate the market without indicators and things, so you have a basic understanding of like the patterns you should be looking for
yep,
to make trades, and then the indicators sort of give you more confidence. So then
yep.
when you're ready to add them, they just allow the understanding of price action that you have to just sort of stand out a bit more.
Yeah, actually, I will try to reflect what you have taught me in this session on maybe other charts or any other random coins, so I can see the information more always. And if I apply it with my hands, it will stick as I get your knowledge as practice, not only seen. But please, can you send us your YouTube channel
Yeah,
so we see the recordings?
yeah, I will do. So what I'm gonna do is I'm going to it most probably won't be tonight. It will be sometime this weekend. I'm
Yeah,
going to post this video on YouTube. So when
yeah,
that's done,
yeah.
I'll send the link in the chat and everyone will be able to go and watch it. It's gonna be like maybe 2 hours though, so it's gonna be something that you might have to watch over like 1 or 2 sittings or something. But yeah.
2 hours. We didn't feel the time actually. Yeah,
Yeah,
bro.
yeah, no, it's true. I can sit here for like another hour, 2 hours. But once everyone's gone, it's kind of like you start feeling the okay, yeah, I've been here quite a while.
Yeah.
Yeah.
Yeah,
Okay.
so we're waiting for the next coming sessions, and
Y-
really, really thank you for your great effort, bro.
Yeah, no worries,
My name
man.
is Rashid, and nice to meet you.
Yeah, nice to meet you, man. Okay.
Nice
All
to
right.
meet
Have a
you.
nice evening, man. Good night.
Thank you.
All right, bye.
Okay, bye bye.